We're going to talk private markets right now because our next guest spent 17 years as a portfolio manager at Goldman Sachs and hedge fund giants Millennium and Bluecrest Capital. Now he's an investor in hot companies we're going to be talking all about right here on Squawk Box, including Lyft, Coinbase, SpaceX, AirBnB, Juul, and Impossible Foods. He's in all of them. Jihan Bowes-Little is here. He's co-founder and managing partner at Bracket Capital, and we welcome to the show. Thank you for being here.
Thanks for having me.
You've gotten into some of these companies really in the secondary market before all of them have gone public.
That's right.
I want to talk to you about why so many of you think have stayed private as long as they have. But one of the questions I have, and it really relates to Uber, given how we've looked at that stock and what's happened to it, is whether you think the valuations in the private market actually are right.
Yeah, this is the fundamental question, right? And I think we have WeWork coming up too. WeWork and Uber are probably emblematic of this cohort of private companies, right, where you see private market investors investing for growth for users with less of a clear path to profitability. We weren't an investor in either. I'm very interested to see how it plays out, and I think there'll be ramifications across private markets.
Why? Did you think the valuation was off?
Yes. Yeah, we didn't think it was a fit for us. We like to invest in businesses with moats, with more predictable and perhaps foreseeable revenue streams. And so a lot of the investments we've invested in have stickier revenue bases. We did invest in Lyft.
So that's interesting. Lyft, yeah, but not Uber. Why?
That's right. We like the focus. We like the focus of the management team. Obviously, Uber has been a fantastic investment for all the early investors who got in. At the stage that we got in, we were more interested in that type of execution with sort of a single-minded purpose as opposed to trying to do everything.
Okay, so you have money, for example, in Airbnb.
We do.
That company has not gone public.
No.
Do you believe that when and if it goes public, it will go public at a higher valuation than where it is today? I mean, that's the fundamental question about so many of these deals.
Yeah, we do. Airbnb, I think, is probably the iconic private market company, right, that every retail investor is very familiar with.
Profitable.
It's profitable. The company does very well. The growth rates are strong, and so we're quite confident. We're looking forward to that next step.
I think it's been a mistake, though, for so many of these companies to remain private as long. I mean, it used to be a mantra. If you were a CEO in Silicon Valley, I want to stay private as long as humanly possible.
Yeah.
And yet, what that means to some degree is that the public market is not able to participate in the growth story in the same way that they might have a decade ago.
That's right, yeah. I mean, increasingly more of the value capture and the value creation is happening in the private markets versus the public markets. There are pros and cons to that, depending upon which side of the table you're sitting. But certainly, I think that a lot of retail investors are being boxed out of a lot of great companies because they're staying private longer. That said, it does give you a lot more flexibility to grow your company with a longer-term mindset rather than worry about quarter-to-quarter earnings. And so I think there are pros and cons, but it's a conversation.
On the flip side of that, though, it also shields the public investor from any downside that might happen when the company is still public or still private, rather. And I'm wondering, John,
that's right,
how you size up regulatory risk specifically, because so many of these companies have a binary risk. Either they're allowed to exist or they're not. I'm thinking of Juul specifically, which is in your portfolio.
Yeah, this is part of the game. This is part of the nature of what we're investing in. And I actually think that a lot of what we'll see in the next vintage of private market companies is companies attacking highly regulated industries, whether that's finance, healthcare. These are some of the bigger problems, and I think a lot of entrepreneurs are drawn to solve the biggest problems. And so regulatory risk is a major risk for many of the companies that we're invested in.
Where do you come down on Juul? When you thought about investing in Juul, how did you think about it? Because, by the way, there's some people who think that Juul is, putting aside the business metrics of the company, it's sort of like investing in the tobacco industry.
Yeah, I mean, I think that, look, from our perspective, you know, we've read a lot of the reports. It's a little bit early to tell. There's a large cohort of people who think that these are much healthier. Obviously, we hope that that's true. I can't comment on, perhaps some of the specifics on what's going on the regulatory side there. But certainly, certainly that was the mission of the company when it was founded. And we hope it plays out that way.
Could you be an investor in Coinbase without being bullish on Bitcoin?
I am bullish on Bitcoin.
You're bullish on Bitcoin?
I am, yes.
What does that mean?
Same thing it means, for most investors. I think when you're a private market investor, you're looking for optionality. You're looking for call options to some degree. I think history has taught us that it's perhaps unwise, to come down adamantly against something which is early in its stages, in its infancy. And so I think that there is a large use case.
You sound like you're about stage 3 or 3.5. You don't sound like a stage 5. You're not yet, are you?
Probably not a stage 5, but that's just because we run a slightly different type of portfolio. But I am a personal investor. We are long a number of assets which are tied to Bitcoin.
Do you expect 5-10 years from now that people will be over the internet making payments using virtual cryptocurrency in a much greater way than they are now?
I think that they will. My point of view is that the strongest use case right now is store of value, and obviously as any
so it's a
Bitcoin
digital
enthusiast,
gold, not as a, but
at
it
least.
also has you also have the ability for frictionless commerce too, which is pretty attractive.
Right. Digital gold with the call option, right? Free optionality on commerce.
Do you think that it will? Sorry, Andy, do you think that it will eventually track a stock to flow model of valuation like gold?
I think it's possible.
I mean, in terms of, the prices that you can come up with are staggering.
They are.
I wonder whether they're pie in the sky or whether that's really something that you can bank on.
And from our standpoint, I think that either hitting the sun or the moon, either one of those scenarios is very good relative to where we are now, and so we're happy to be invested.
It'd be much better. 92 million versus a couple. Yeah, that's
it would.
It
would.
Before I let you go, I wanted to ask you about the IPO process.
Sure.
Because one of the things that we have seen, which has been a unique sort of shift, is this idea to a direct listing and what that means. Obviously, you can only do that if you don't need the money, at least in the immediate term. But there's a lot of talk on Wall Street now about people thinking, you know what, I'm going to do a direct listing now, and I'll do a secondary three months out, 6 months out. So. And how does that play?
Yeah.
As an investor, what do you like?
The disruption and the innovation doesn't stop, right? And I think it's potentially disrupting some of the processes of the finance industry as well as the finance industry itself. Companies that we mentioned earlier, some of the more iconic, well-known names, obviously have that opportunity. We're open-minded, and we think it's a positive development. It's more transparent, and so.
Right. Final. You want SpaceX to go public?
I'm very happy with what SpaceX is doing right now. Eventually, I think every investor wants to see some sort of monetization. But in the meantime, I think this is a business that could only have been built in the private markets. It was relatively impossible. Right. People thought at the beginning. People think that's less so now. The company is very stable. The growth is exceptional, and there are many, many different paths to a positive outcome for private investors.
You want Elon Musk to be, though, a public company CEO for that particular company?
I'm just an investor on the private side.
You giving credit to Elon or to Gwynne Shotwell, who's done an extraordinary job?
Yeah, I think that they both have done an extraordinary job, honestly, right? I mean, I think there's a lot of news flow about what happens, in personal lives, et cetera. But what I'd say is that, look, when you have a vision that's that extraordinary and you're able to execute it in this kind of style, I think that we all have to be thankful for them building what they built.
If Elon ever tried to merge SpaceX and Tesla, what would you think?
No comment.